Welcome. In this explainer, we're going to master the basics of the accounting journal. This is designed specifically for anyone preparing for multiple choice exams, because this breakdown will give you the clarity you need to really ace those questions.
So here's our plan. We'll tackle this in 5 simple parts. First, we'll cover the core concepts and terms. Then we'll get into how journals actually work. After that, we'll spotlight some common exam traps. We'll walk through a few practice questions, and then we'll finish with a super concise, high-yield summary. Let's get started.
All right, first up, core concepts. Before we can really understand how journals work, we have to speak the language. So let's start by defining some of these key terms.
So what exactly is a journal? Well, the easiest way to think about it is like a business's diary. It's what's called the Book of Original Entry, which is just a fancy way of saying it's the very first place that every single transaction gets recorded, in date order as it happens.
Now let's break down 3 terms you're going to see all the time. First, journalizing. That's simply the act or the process of recording a transaction. The narration is the short description you write to explain what the transaction was about. And the ledger folio, or LF, just think of it like a page number. It tells you exactly where this entry is copied over to in the main accounting book, which is called the ledger.
Okay, on to Section 2, how journals work. Now we're getting into the actual rules and the process of how it's all done. This image here highlights 2 really important features. First, like we said, everything is chronological. It's all in order by date. Second, and this is absolutely crucial, is that it uses a double entry system. What that means is every transaction always has 2 sides. There's a debit in one account and an equal credit in another. This is what keeps the whole accounting system in balance.
So the big question is, how do we know which account to debit and which one to credit? Well, the secret is that you first have to classify every account into one of 3 types. Getting this part right is the foundation for applying all the rules correctly.
The first type is what we call personal accounts. These deal with people, firms, and companies. Now, there are 3 subtypes. Natural accounts are for real people, like Akul. Artificial accounts are for legal entities, like a company. And representative accounts, well, they represent a person or group. For example, wages outstanding represents the employees who are owed money.
The other 2 types are real and nominal accounts. Real accounts are pretty simple. They're for assets and properties the business owns. This includes tangible things you can touch, like machinery, and intangible things, like patents. And then there are nominal accounts. These track all the incomes, expenses, gains, and losses, things like salaries and rent.
Okay, pay very close attention to this slide. This is probably the most important thing you'll learn in this entire module. These are the golden rules of accounting. You absolutely must memorize these for your exam. For personal accounts, you debit the receiver and credit the giver. For real accounts, you debit what comes in and credit what goes out. And for nominal accounts, you debit all expenses and losses and credit all incomes and gains.
Once you know those rules, journalizing becomes this really clear step-by-step process. You see, you just start by looking at the transaction, you figure out which accounts are involved, and then you apply the golden rule for that account type. After that, it's just recording the details, the date, the debit account, the credit account, and a quick narration. It's a logical system you can follow every single time.
All right, Section 3. This is all about helping you ace those multiple choice questions. We're going to focus on some key comparisons and point out common exam traps.
First up, a quick comparison you need to know. A simple journal entry is exactly what it sounds like. One account gets debited and one account gets credited. Nice and easy. A compound journal entry is when a single transaction affects more than 2 accounts, which means you'll have multiple debits or multiple credits or even both.
Now, this is a classic exam topic, so listen carefully. The key difference between a trade discount and a cash discount is how they are recorded. A trade discount, which you get for buying in bulk, is never recorded in the books. You just record the final net price. But a cash discount, which is a reward for paying early, that one is recorded. It gets its own entry in the books.
And here is a major MCQ alert. This trips a lot of people up. When a business owner uses company money to pay for a personal expense, like their own income tax or house rent, you do not record it as a business expense. Instead, you have to debit the drawings account. This account is specifically for tracking money the owner takes out for personal use.
Okay, moving on to Section 4. It's practice time. Let's analyze a couple of exam-style questions so you can see how these concepts actually get tested.
So here's our first question.
Which rule applies to a nominal account? Take a second and think back to those golden rules we just talked about.
And the correct answer is C. This is a pure memory question. The rule for nominal accounts is debit all expenses and losses, credit all incomes and gains. You can see that option A is the rule for personal accounts and B is the rule for real accounts.
Let's try one more. This one is testing our vocabulary. A short description of a transaction in the journal is called what?
The correct answer here is B, narration. Remember, that's the definition we covered earlier. It's not A, journalizing, because that's the action of recording. It's not C, ledger folio, which is the page number. And it's not D, posting, which is the separate step of transferring the entry into the ledger.
And finally, Section 5, our high-yield exam summary. If you only have time to review a few things before your exam, make it these points right here.
So, here are the absolute must-know facts. 1. The journal is the first chronological book of entry. 2. Accounts are either personal, real, or nominal. 3. You have to know the golden rules by heart. 4. A trade discount is not recorded, but a cash discount is. And 5. Any personal expenses paid from the business must be debited to the drawings account.
And that wraps up our breakdown of the journal. Now, here's a final thought for you. The next time you see a list of business transactions, try this. Before you look at the answer, try to apply the golden rules yourself to predict the debit and the credit. Actively practicing that skill is truly the best way to lock in this knowledge for your exam. Thanks for watching.